All right, so I've got Netflix on screen. First thing I want to point out, I know UNH went crazy yesterday, but let's be honest, guys. You don't need to be trading that kind of stuff. Yes, $20 could have made you 500, 200 would have made you 50,000. Sorry, $20 would have made you 5,000, 200 would have made you 50,000. But honestly, you don't need to be trading that kind of stuff. Honestly, especially as a beginner, it's just not worth it. Now, I have Netflix on screen because they have earnings right now. I think it kind of ran. And I don't know if it's going to hold up going into next week's market, okay? But either way, let's get into the big boy stuff, all right? So entries and exits, okay? So I'm starting out. I'm going to start out with, let's see, what's a nicely moving stock? I'm going to go with, I'm going to go with AMD. All right, I'm going to go with AMD. Where are we? AMD. All right, cool. So on screen, I have AMD stock, okay? We traded it yesterday, didn't we? In the Discord with puts. Now, let me show you something, right? First and foremost, every single trade you take, you should have a plan, right? I don't care if you're going in there with a day trade. I don't care if you're going in there with a swing trade. I don't care if it's a call out. There's no excuse not to have a plan, right? And I'm serious when I say, like, even if it's a call out, of course, whoever calls it out, me, J Money, showing off, whoever, has the overall responsibility. But who's going to manage your actual trade? It's going to be you at the end of the day, okay? It's going to be you. So again, no matter what it is, you should have a plan. So here I have AMD stock, okay? What I'm going to do, I'm going to go to the weekly chart first. I'm going to go weekly, then I'm going to go daily. And this is just a nice way to get you to mark support and resistance. So here we go. Here is AMD. Now, I have a lot of lines on this chart, but this is something you can just do to start out with, okay? You find your weekly highs and your weekly lows. Horizontal line, here's your weekly high. And I'm going to do these in white, okay? Weekly highs and weekly lows. These are key levels, so, right? Weekly highs is around there. I'm going to change it to a white line, and I'm going to mark the weekly lows as well. Change that to a white line as well. These are levels I'm going to be taking and using them next week, okay? So weekly high, 97.53. Weekly low, 85.39, okay? So just so you know for next week, that could be a key level of resistance. This could be a key level of support, okay? I'm going to go to the daily chart now. And this time, I'm going to look at the last candle. I'm just going to mark, again, daily high, daily low. Today's high, 89.04. Today's low, 87.40, okay? So now we've got 4 levels there, right? We've got today's highs and lows. We've got the week highs and lows. 4 different, let's call them price targets. And this is just, as a beginner, some stuff to look out for, right? It doesn't mean price is going to reach those exact points and reject or bounce on those exact price points. That's not a guarantee. But at least you have some key levels, some key price points to look out for, right? So again, you do that on a weekly chart to start out, and then you can do it on a daily chart. Now, the next thing you need to do is identify the overall trend. Overall trend of this AMD is bearish. You can see it, rejected by the moving averages. It's selling off. If you zoom out, if you're not sure, you can zoom out. Okay, where was AMD last week? Up here, 98. Now it's at 87. Where was AMD the week before? Up 103. Week before that, 115. Okay, AMD is bearish right now, okay? So you're identifying the trend, in your free time, in the evenings, pre-market, weekends, whenever the market isn't closed. You need to at least identify the trend, just so you have an idea of what the stocks are doing, right? Of course, you can do it during market hours as well, but I'm just saying, in your free time, spare time, you should also just be looking at the overall market. If you're not sure about the overall market, go click on SPY, right? QQQ, which is the NASDAQ, IWM, which is the Russell, right? So you have all those marked out. You have identified the trend. You figure out, what direction the market is most likely going to go in. And that, again, it's not a guarantee, but it's most likely going to go in that level. Now, the third step I'd say is understand this. When we reach levels of resistance, we're going to sell off. when we reach levels of support, we could bounce. So here's a level of resistance. We got rejected, we sold off, right? If I go to Apple stock, down here is a level of support, 172. So let's say Apple was to fall down here and get close to that 172 price point. I would be getting ready to look at calls if the price already bounces on the level. If the price breaks below, of course it still puts. But if the price bounces that level, it will be ideal to get calls again. Now, I've said all this without even touching on the moving averages. Now, the moving averages are there to kind of guide us, right? I have the 9, the 21, and 200. Sometimes, so the green is the 9, orange is 21, red is the 200. Sometimes I change the red to a 50 just to get a different look, okay? But either way, like I said, I've not even touched on the moving averages yet. All we've touched on so far is marking the weekly highs, weekly lows, daily highs, daily lows, identifying the trend, and understanding that you're trying to get puts at resistance and calls at levels of support. Okay? Now, the moving averages are a big part of my entries and exits, my style of trading, whatever I'm trying to do. So, for example, this is Apple stock, right? What I'm going to do is go to the 4-hour chart. Okay? And when I do this, I'm just going to show you what happened with Apple this week. Okay? So Apple jumped, it gapped up from last week Friday to this week Monday because of some news, right? News plays a part in the stock market, in some stocks price action. So what was the news? Well, obviously you guys know tariffs have been going on, and Trump announced that companies like Apple, Nvidia, some others may be exempt from specific types of tariffs, okay? It caused it to rise. Nothing wrong with that. Does it mean we get calls straight away? No. Because price tends to come back to the moving average, which it did. So why do I have the moving averages here? When it comes to trading an Apple or an Nvidia or a Tesla or whatever, I can use the moving averages just to kind of gauge where price is likely to go. So if we scroll back a couple of days, right? This is Monday. Monday it gapped up, right? It gapped up, and then what happened with it? Price came straight down to moving averages. So would I have took puts? Probably not, because we were kind of just in a free zone. But let's say we got to this part, this price point, where price is in between the moving averages, consolidating. It means either a bigger move is coming to the upside or downside, but it's preparing itself. So again, you go to the 50-minute, you can go to the 5-minute as well. I'll go back to Monday. Right. Here we are. Right. Price hovering in and around the moving averages. Doesn't mean it's going to be calls or puts yet. We're not sure. Right. Now, as you guys see, we ended up going from 202 up to 207. Right. So it ended up being calls. What would I have done to get in this trade for Apple? Well, once I see the consolidation, I'm just waiting, being patient. Check the higher time frames. 15-minute. Let's go back. All right, 15-minute. It was looking a little bit more bearish, but then it was holding. So it was, wicking up. They're trying to push it up. I'm just waiting. Now it starts to push up. Okay. We see the first candle break above the moving averages. I'm like, okay, we're leaning bullish. Now I see the pullback and I see it holding at the moving averages. It's a good sign because it's not falling below. It's holding exactly at the moving averages. Another green, so we see the doji, another green candle. I might say to myself, all right, look, in the last, 40 minutes, in the last hour with the 450-minute candles, we've gone from, 201, 202 up to 204. All right, it's looking bullish now. And in my mind, I'm thinking, will it get back to the highs of the day? Maybe, maybe not. But either way, I see it's holding above the moving averages. I start looking at the hourly chart. We go Monday. The hourly chart, the next hourly candle is now green. You see, we had the first 3 hours red. The next one is green. I'm saying, okay, multiple time frames now. We're starting to get bullish. We're starting to flip bullish. All right, I'll go back to my 5-minute chart. Let me just go again to Monday. Go to my 5-minute chart, and I'm saying, okay, to myself, once it pulls back, any of these price points, I can go around here, any of these price points, because I see on the higher time frame, it is still bullish. I don't mind getting in calls. Now, funny enough, it would have sold off a little bit first, and then on the 5-minute, you're thinking, okay, is it bearish? You go to the higher time frame, the 15-minute, which I just showed you, it was still bullish. The 5-minute looks a little bit more bearish, but the higher time frame, the 15-minute, is still bullish. So I would have gotten to calls. Let's say we're in calls, hypothetically, we're up 15, 20%, whatever. We're wondering, where do we take profit? Because Apple's gone from, 202, 203 up to 204. Sorry, let me go back. Looking at the wrong day. Here we go. Yeah, so Apple would have sold off a little bit, and I'm thinking, okay, is it bearish? Again, higher time frame would have showed bullish. So now these are the prices where you start to get a bit worried, maybe a bit scared, because you're seeing these long wicks. If price doesn't close below the moving average on the 5, on the 15, etc., you should still be good. Now, again, where do we take? Finally it starts rallying. Great. It's nice. We all celebrate, etc. Where do you start taking profit? Well, for me, and this is how we do get those 120s, 130s, 140% returns. We're going to look at AMD in a second. This is how we get them. If it's not breaking below the moving average and it's just consolidating, go higher, or it's making higher highs, higher lows, stay in the trade. If you're scared, take some profit off the table just to secure that profit. Nothing wrong with that. But again, it's Monday. It's 4 days till expiry. Nothing really to be scared of yet. Okay. Now, where do we want to start taking profits and getting out of the trade, right? And this is what Silent Strat is asking. I think it was Silent Strat asking about when it comes to taking profit. Well, first you see a doji. Doji is a candle which symbolizes a potential reversal, right? It also symbolizes a bigger move. So when that doji occurs, just be on the lookout, because hey, we could see a change soon, right? We could see a change soon. Yeah, like Silent Strat said, getting out of a trade too early in profit, right? So a lot of people in reality, well, look, we got in at what, 202, 201, 202, 203, let's say. We're up at 204.5. They're excited. They're seeing, good money, but then they see these back-to-back red candles on the 5-minute. They're thinking, okay, I'm going to sell out. I'm going to sell out because it's going down. In theory, it's still just pulling back to the moving average for a bigger move to the upside. Now we get up here, we see a crazy red candle. Doesn't mean you should get out straight away, because it's better to get out on a green candle. But you see now, prices in between the moving average trying to push up on a 5-minute. You can go to the 15-minute as well. And this is where the difference is, right? Between people that take profit early and people that take profit at the right time. You can never be at the perfect time, but you can be at the right time. So here we are. 15-minute is still looking good. But you realize two things. One, again, the doji. So potential reversal is on the cards. And then two, you see these back-to-back red candles on the 15 and you start to break below. Yeah, it's time to get out, really. It's time to get out. The 5-minute, there's a green 5-minute somewhere around here. It's time to get out, okay? The difference between the people that get in too early, too late, the people that get in the calls when it's up here, they don't get as much profit. The difference that with the people that sell out when it pulls back down here, they don't get as much profit. The people you want to be is, let me just circle it for you. You want to be any of these, any of these, I'd say these, let's say these 4 candles, right? Where price has moved so far away from the moving average and it's coming back, where price is, breaking below moving average, where price is signaling a reversal, any of those 4 50-minute candles. And to be honest, that's almost like an hour period right here where you can get out of the trade. If I go to the 5-minute chart and I pull up, the price points where I said, okay, you can get out. On the 5-minute, there's a lot more exit points. Let me show you now on a smaller scale, right? Here, right here. This is where you can really get out. Any of these candles, really. These 1, 2, 3, 4, 5, 6, maybe even 7 candles. But price is hovering in between moving averages now. It's 45 minutes before market close. There could be some selling pressure once, 3:30 Eastern comes, which it was. And what happened at 3:30 Eastern? They just start pushing it down. So again, get in the calls when it's closer to moving average and it's showing signs of strength. Get in the puts when it's breaking below the moving averages and it's showing signs of weakness, or when it's 30 minutes till close, or Jerome Powell's about to speak, or those kind of stuff. All right. So let me get to look at AMD so I can kind of show you guys this, how yesterday's trade went. AMD, Palantir, similar stories yesterday. So, and let me know if you have any questions. I'll check the chat and then see what's up. Okay. So yesterday, right? So AMD. I'm not sure the exact time. Was it AMD? What did we trade yesterday? I think it was AMD. Let me just quickly check my tab. Yeah, it was AMD. Okay. So yesterday's trade, AMD, right? The entry was pretty early. Um, the entry, the entry yesterday was around here. This is when I first got into the AMD puts. Okay. Now, as you can see, open was crazy. Pushed it all the way up, but look what it hit. This level $89. Sold off. Now, once you see this Dragonfly Doji, you could be thinking, okay, bigger move to the downside or reversal. Moving averages cross to the downside, which is a bearish signal, bearish indication. You could have, yeah. Once it crossed, you could have got inputs here. That wasn't where most people got in the puts, but they got in here on the second doji. So the reason being, it's like a cross and then another, like a double cross. It went the moving averages crossed to the upside. Don't know if you guys can see it well, to the upside and then straight away to the downside. So where I called the puts, it was a little bit early, right? And the reason being, like I said, I saw the first cross to the downside. I said, okay, this looks good for puts. Now, a few of you asked, is it a good time to enter puts when it was consolidating? And I said, not really yet. It proceeded to run. We got another doji. It started to cross the downside again. Now I said, yeah, it's probably a good time to enter now. We got that first move and we hit this level, the 86.55 level. We bounced, we came up. Fine. Guess what? This movement here on the 5 minute chart, this is scalper's paradise. Now, funny enough, the actual biggest move for this, if you look at the 15 minute chart, you'll see it a bit better. The actual biggest move for AMD, right? The actual biggest move was from these wicks, right? From 87 to 86 something, $1 drop in what? In a 15 minute period. The second one, towards the end of the day when Powell was speaking, from 88 down to 86. So the trade, I know a lot of people got out of the trade early and stuff. The only reason this trade was difficult because of, again, what I called the scalper's paradise from yesterday, right? All this kind of stuff. But in reality, if you use the moving averages, you looked at the candlestick patterns, right? Inverted hammer candle right there. You could make money off the puts purely from just trading it when it crossed the moving average to the downside or even to the upside. So again, my trade only worked out because we got in ahead of the first drop, right? Around here when it was 88. Now, again, there was different entry levels, 87.76, somewhere around here, 87.28, and then of course up here again, right before Powell spoke. That's for puts. When the moving averages are crossing to the downside, right? Cross the downside, take those puts. Funny enough, I don't know if anyone did get calls. The cross to the upside gave an entry for calls. And again, our puts ended up being 150%, 160. I don't even remember. I just remember seeing that Powell speaking and a lot of things flip bullish. What I'm trying to highlight here is there are many different entry points and it comes down to patience, right? I called out puts, I think, somewhere around here. Yeah, around 7 a.m. my time. This is where I called out puts around the first Dragonfly Doji, right? Around $88. And if you missed it, you didn't really miss it because we came back up to a similar price area. And we had another doji and we started to sell off again. Cool, price bounced. We pulled back to the moving average, we consolidated a bit, we fell again, we rose again, and then we fell again. Either way, what I'm highlighting is if I'm still in the puts all that way, it's because I looked at the higher time frames. It's because I looked at the overall, the overall trend, right? This is yesterday, right? The overall trend, 1 hour is rejecting the moving average, selling off, right? The overall trend, 4 hour. 4 hour again, rejecting at level of resistance, selling off. So I'm looking at the overall trend. I'm saying to myself, I'm sticking with the puts. I'm sticking with the puts. I didn't sell till 31 minutes before close. What happened 31 minutes before close yesterday? This is why I say it's good to be aware of the time, aware of things that are happening, aware of all that kind of stuff. Look what happened yesterday, 30 minutes before close. Where is it? Here it is. Here, right? What did they do? And the only reason they did that is because the whole time consolidation, selling off, consolidating, selling off, consolidating, selling off. Now the big, oh, sorry, hold on. I think just now it's giving you the wrong analysis, but either way, this was the move we took advantage of, sorry. So let me just review that again for you. So this is the entry for, so the same again, puts was the entry, up somewhere around here, right? Rejection of moving averages, sell off. Bounced, pushed up, never broke above both, and the moving averages never crossed the upside. It's just that we were so far overextended to the downside, they did push it up and run it up a little bit. Now, the sell-off, well, so there was one sell-off, consolidation, two sell-off, consolidation, three sell-off, 30 minutes before close. I think everyone in the group pretty much said it. They're going to try to run it up. I don't know why, but they do that, and then they ran it up for the last 30 minutes, before close yesterday. Now, the funny thing is, a lot of these kind of moves, like I said, you could take advantage of purely because if you identify that, we never broke above moving averages, the price never broke above moving averages. All it means is we're still bearish. It means, sure, until they really run the price up like they did here with the crazy 5-minute candles, there's nothing to be worried about. Let me pull up the 50-minute chart because I realized, I was looking at Thursday, not Wednesday. So again, here's Wednesday now. Right? So here we go. 50-minute chart shows, cool. First of all, the first 15-minute candle was crazy. They just pumped up AMD. But we kind of knew, okay, well, it's all bearish because it's dropped overnight. Consolidated, sold off. Pushed up, sold off. Consolidated a little bit. If you saw the wicks on here were nasty, and then it sold off again. Then the last, 2 50-minute candles, they ran it up. What I'm trying to highlight here is a lot of the time, when you zoom out, is it hourly again? Is it hourly? A lot of the time, when it's so far overextended, look at the drop, 95 all the way to 87, in overnight, right? When this happens, when this occurs, it's just good to know, hey, just because they pushed it down so far, doesn't mean they're going to sell it off straight away at open. Sometimes they run it up at open like they did, and then they'll sell it off again, which is what they did yesterday. So it's also a bit of a psychology game, right? So your entries and your exits should be pretty clear based on not just the levels, not just the EMAs, but also the psychology aspect. Again, yesterday, Wednesday, cool, selling off the whole day, we're enjoying our puts. 30 minutes before close, run it up. Why is that? Well, for example, QQQ, NASDAQ, 30 minutes before close, a lot of these options are expiring. So all of these puts or whatever they had expires at 12:30 my time. And then they ran it $6, right? They just started rallying at $6. So everyone who had 0 DTEs would have had to sell. Those would have expired. Everyone who was in an AMD or something like that, any stock which expires today, so the 17th, any of those people would have lost a lot of money or lost a lot of their profits. Let's say not a lot of their money, but their profits. Hopefully that makes sense. Sorry, the first AMD analysis I was doing on Thursday instead of Wednesday, forgetting that yesterday was Wednesday. So hopefully that now makes more sense. Let me check if there's any questions. Nobody even spotted that I was analyzing Wednesday. I was analyzing Thursday instead of Wednesday. Well, either way, point still stands. Any questions? If there's no questions, that should be okay then. Yeah, exactly. Potential reversal. Yeah. Hold on, let me charge my laptop. Even though I was on 1%. All right, cool. Whew, 1%. Dangerous life. But yeah, EMA's crossing does signify a potential reversal. Look how they got close together here and they didn't cross over, but Price did. Price came straight back to them and through them. Any other questions? Yep, it's recorded. Yeah, no problem. I'll probably have to remove that first analysis because I did it on the wrong day. I was talking about today when I meant to analyze the price action from yesterday. But either way, everything I said was still the same, so it's all good though. It's free. It's free. Um, it's in the newbies chat. Let me just tag you. I think. Yeah, look at what I wrote on 10th of March this year. You'll see it. Those all up here in newbies traders. Any other questions? Okay, so good. So I wanted to analyze Palantir from yesterday, and let me make sure I'm looking at the right day now. So yesterday. Okay. Let me squeeze this in here. Okay, excellent. This is PLTR, Palantir, the famous stock that had our this code in a chokehold for like 6 months straight. All right. So here is the open yesterday, right? Tuesday, it closed at 98, and we gapped down and opened up down here yesterday, Wednesday. Okay. Now the funny thing with this is once they gap it down, what I tell you, they want to run it up at the market open, get everyone thinking it's bullish, it's bullish. Everything's on discount, they're buying it up. Okay, let's see. What does the other time frame say? 50-minute chart. Yesterday, right? Hold on. 50-minute chart. Okay, pretty bullish, but still below the moving averages. Yeah, a little wick, above the moving average, but still bearish overall. A little bit bullish, but still bearish overall. All right, second 50-minute candle. Moving averages cross to the downside. Death cross. Bearish signal. Bearish indication. Sign that we could be going lower. Again, remember, overall trend will dictate what kind of trade you're going for. So remember, they gapped it down overnight. So again, we're more bearish than bullish. They gapped it down overnight. Okay, good to know. Now, once I see these wicks, right? Once I see these wicks, I know what they're doing. These kind of wicks and then a big, okay? And I'll just wait. They push it up again. Now, it's still rejected by the moving average. I'm thinking, okay, I'm going to take a chance right here.
somewhere around here. As it starts to push up to moving average and get rejected, take a chance, which is what I did. So we sold off all the way down to the moving average, the 200. We bounced, we started to push up, and then they brought the last 30 minutes, they brought that bullish momentum and brought it up again. So yeah, the gap down kind of told me, okay, we're more bearish. Until they really break it above the moving averages, we're still bearish. We're not bullish yet. It's a pretty simple trade for me in this case. For the puts. It's a pretty simple trade. That was pretty much it. They gapped it down overnight. It's already bearish. They pushed it up. First couple candles got rejected. Push it up again, got rejected. I'm not looking at nothing else apart from puts. Right? That's pretty simple. Does that make sense to everyone? And then yeah, we got the bounce above the moving average. We didn't slice through. Yeah. I do. On the higher time frames. Good question though. But I do. I do. Do you know why? Look at last year. Um, yeah, there was no resistance didn't exist for it last year. Right? I can even go back further. There was nothing. There was nothing until finally. And it's funny because the first time we traded this last year, I think it was $16 or $14, and I said, "Oh, of course." And I said, "Oh, this is a stock that can run." Now, I'll be honest. When I said it can run, I did not expect to see this kind of running up to 125. I'm more meant that we can run to like 60, $70, $75. We ran to we ran to 125. So I mean, I was happy because I was in the play, but yeah, I didn't have a lot of I don't have a lot of resistance support nothing on there. Thanks for that.
Any other questions? I mean,
If not, I'll just continue with what I plan to talk about. Okay. So one thing I want you guys to always be aware of, right, is different time frames can tell a different story. So your timing does need to be on point. Okay. I say that because 5 minute chart Palantir, right? This is talking about Palantir. 5 minute chart yesterday, Wednesday. It was always below the moving averages. Always below the moving average. Always below the moving average. Right, 50 minute chart. Yesterday, Wednesday. Where's Wednesday? Always below the moving averages, right? But there would have been times, hourly chart. Wednesday again. Here we are, Wednesday. Here we go. There would have been times where the hourly, not as close, but it is price is pushing above the moving average. So someone might say, oh,
this is bullish without letting the candle close. This is bullish because you see the wicks up here. Cool. Let the hourly close. The hourly closed red. Then you kind of know what's up. Different time frames will tell a different story, right? There's 1,000 different ways to trade a market. But you look at the overall trend, you know, right now, once it crossed below and starts selling off, you wait an hour, 2 hours, you see it's bearish, right? So when you do want to enter these trades, there's a few different things you want to look out for. Go ahead, question? Okay, a few different things you want to look out for. EMA crossovers is one, that consolidation is another, the test, the retest is another. Sometimes it's of the moving average. Sometimes it's the test and retest of support resistance. But this is the problem. This is a huge move from 98 to 95 overnight. That's a huge move. A lot of people will get trapped in this huge move and think, okay, I can get calls now as they run it back to because there's a gap to fill. Don't get trapped. Sometimes you don't even need to touch it. Like I said yesterday, just wait, just wait. I told people because they asked me honestly. They said, "Is it a good time to get in?" I said, "You know what? I'm waiting. I'm just waiting. I'm already in the play, but since you're not in the play yet, I'm gonna be honest with you. I'm just waiting because I was down 15, 18%. I'm waiting. When it got a second retest, third retest, whatever, and I said, okay, yeah, we're looking good. It's not breaking above the moving averages. A lot of people would have got trapped in calls trying to do this, trying to catch the consolidation to the upside, consolidation to the breakout to the upside. No need, no need at all. When you're looking to get into calls, it's about entering price. Once we break above and we test back to the downside and then continue pushing. Trying to get calls here and jump the gun is tough. The way I trade, yeah, I will miss out on opportunities. Like if Palantir went from 95 back up to 98, sure, I would have only got in at 96. I would have missed a $2 run up, right? But in reality, the way I trade also saves me sometimes because I didn't get in calls, I didn't get chopped out here or smacked down when it started selling off. So my entry is pretty conservative, but again, it saves me from having to try and jump in on the first breakout and try and chase that breakout, before it just sells off. So just use those EMAs to navigate, right? Use them to navigate. They should like if your inputs when it as it's not breaking above the moving averages, your inputs and it starts to break above, yeah, then you can get out. If it never breaks above, there's no real reason to get out for me. That's how I trade. That's my trading style. I use those EMAs to navigate. And then, as you trade, let your trade work, let your trade do the work, build your confidence, Don't be afraid to, if I say I'm inputs, don't be afraid to get inputs, when I say I'm down 10%, 12%. It's what some people did yesterday. Average is 1.38. Some people would have got an average of 1.10, 1.50. It's all about your confidence and your conviction when you're trading it, you know? So, yeah, that's mainly it, really. That's mainly it. Any other questions? So the indicator is called the multiple EMA, 20/50/100. But I set my EMAs to 9/21/50 or /200. But the indicator is called the multiple EMA 20, 50, 100. You're welcome. Great question, though. Any other questions? Oh, yeah, well, let me see. Oh, choosing in and out of the money, but not too far out. Great question. Great question, though. Yeah. So think of it this way. Let me see, the closer you are to expiry, right, the more in the money you want to be. You ain't got that time. You ain't got much time to be out the money and all that kind of stuff. If that makes sense. If you're looking at contract, remember I traded CELH a few weeks ago and it expired today. CELH was about 26 or $7, and I got a $30 call, which expires April 17th. And I did that back in March. That was $4 out of the money. CELH ended up running to 37 or 38, but I was $4 out of the money on such a cheap contract because I had 5 weeks to expiry. AMD yesterday I did a contract which was $1 away from the money. Yeah, well, that was a great question. Well done. No problem. Great question.
Yeah, it was. Okay. All right. You see that purple box? I've had that drawn for like, first time I drew it was somewhere around here. Maybe no. No, no, that's not true. It was around here. So 2 months ago. Price fell back below. It started coming back. I said, okay, hold on. We're almost back in the zone. They had earnings. Remember, I called the earnings. I said calls, and it gapped up. All right, cool, great gap up. Came back to my zone. It started hanging around here. Started breaking on moving average. I said, you know what? Yeah, it was around 27 bucks. I said, you know what? This could be the time it starts to break out the zone. I'm gonna get in early, but I'm gonna give myself enough time. I'm gonna only go $3 out the money. Exactly. Well, look, within, so it kept pulling back to it, right? So first it held the zone. Second, it just held the moving average. It kept pushing up. I said, you know what? And it was a good day that day. That Friday was a good day. I said, let me just try some calls as well. That was it, and it flew. To be honest, even my price target this high, 34. We went past that. Went to 38. Yeah, yeah, yeah. I use everything that's up here. 5, 15, 1 hour, 4 hour, daily, weekly. I use all them. Yeah. Oh, okay. Yeah, that's my. Yep, that's my. Yeah. All right. Any other questions? These are. You heard it. Hey, you guys came with some good questions though. So let me know if there's more. I've still got 5 minutes. I just make sure to set it ahead of time. That's it. That's what I use. I used to use the RSI and the MACD, but not no more. I'm pretty cool with the EMAs and kind of with the news, the way the price action is going. I'm pretty cool with that. Yeah. MACD crossover as well. Like the two lines in the MACD. I think they also EMAs will cross over to the upside. For the RSI, I would look for oversold and overbought signals. So overbought is up there, like around I'll say 75, 75, 80. Not even 75. Yeah, 75 is overbought, and I'd expect it to pull back a bit, and then oversold would be like 30, around 30. So when it's oversold, I expect it to kind of push higher soon enough because people's going to start buying it up. When it's overbought, I expect them to sell it off, so I start looking at puts, and you can use the higher time for that too. Especially when there's like a double bottom, double top in there, then just mixing those patterns, combining them with the RSI helps.